afternoon. Welcome to the weekly livestock market update and Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Not a ton of reports for us to talk about, but I think there's a lot to talk about in that cattle on feed report, and we'll get to that coming up here in a little bit. But to get things off, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, Megan, really not a lot of change. You look at cash fed cattle, they were unchanged this week. Those feeder cattle markets were by and large steady on the week as well. On the future side, the December live cattle futures contract was up $1.10, and the January feeder cattle contract was up $1.50. Choice box beef fell $6.22 this week. We really had weakness in all components except for ribs this week on the beef side. Hogs, cash barrel and gilt prices were down nearly 90 cents this week. The December lean hog futures contract was unchanged from where we finished last week. The pork cutout value lost $1.40. That was weaker loins and bellies really leading the way there.
It's been weird not seeing the markets every day. Are we continuing to kind of see some of the same things that we've been really talking about and the impact that they've had on the markets just in terms of prices and how things are moving?
Yeah, so I think we continue to kind of see this tug and pull and I will say uncertain domestic demand as economies slowing, higher interest rates, exports that have slowed in some places as exchange rates have gone higher. I think that uncertainty is there. And then what's the supply side that although more cattle, certainly fewer hogs, those stories really haven't changed as we look at what's happening right now.
Let's take a look at weekly slaughter numbers as we look at the cattle side of things. How are things looking? And then let's talk a little bit how they're looking year over year.
Yeah, so on the cattle side, the USDA is telling us a run of 674,000 head of cattle for the week ending November 19th. That's 3,000 head more than we slaughtered last week, but 6,000 head less than what we slaughtered a year ago on the cattle side. Hogs, a bigger run of hogs this week, 2.605 million head of hogs slaughtered this week. That's 102,000 head more than we did last week, but 27,000 head less than where we were a year ago at this time. And when you look at those year-to-date numbers, Megan, cattle slaughter 1.6% higher, so it's unchanged relative to our discussion last week. And also hog slaughter down 2.9% is where we were last week as well.
Scott, we talk a lot about monitoring what's going on the demand side of things, but is the industry also watching what's going on in the supply side, especially looking at hog numbers and what's been happening there?
Yeah, I think so. So I keep describing hogs as sideways. You look at hogs and pigs, you look at almost everything that we have. We've been seeing a lot of sideways, especially after we got through the first few months of the year. And so I think a lot of that continues given the numbers that we see today. Higher costs, whether it's feed or other inputs that are higher, as well as I think still some concern about how much could producers grow before processing capacity hits again. I think kind of keeps us at bay and not growing too quickly. Get corn prices down a lot, maybe that changes the outlook, but that's not where I'm at right now.
I think it's really interesting talking about the corn, like the input side of things too, and relates to how much that's maybe impacting growth or potential growth on cattle and hogs.
Yeah, so correct. So again, I probably used this line before, but we all remember Glenn Grimes, and Glenn would often tell me, Scott, when corn got to $3.50, hogs got constipation, and when corn got to $4, they got constipation and lockjaw, and we're feeding $7.50 corn today. I don't think we want to forget that certainly had impact on the supply side of both cattle and hogs.
Scott, do those numbers account for inflation?
I don't know if they do or not. How's that?
All right, let's talk cattle on feeds and cattle on feed. And as we talked last week, the thing that we were going to watch out for was placements, and more placements. And as we take a look at these October numbers, the big story is going to be placements. Take us through the report and what are we watching?
Yeah, you're correct, except you said placements and more placements. It's placements and less placements.
Yes.
All right. So we got to get the terminology right. But
I apologize.
So October placements, according to USDA, was 93.9% of a year ago. That actually fell outside the low end of the pre-report range. The lowest placements in October since we began the series in 1996. And just reminds us of things that were coming. You know, you and I have had this discussion about fewer cattle. I believe our day of reckoning is beginning to show in this report. And when you look at by weight categories here for a second, less than 600 down 30,000 head, 6 to 699 down 35,000 head, 7 to 799 down 20,000 head, 8 to 899 down 48,000 head. Placements in those larger weight categories were basically unchanged relative to a year ago, but it starts to tell you what's coming in terms of fewer cattle coming to slaughter. On feed, November 1 was 98% of a year ago. That was pretty close to little below the midpoint of pre-report estimate, but we're going to get tighter, and we're starting to see signs of that tightness out of this data.
As we talk about this, I know typically we have cold storage and livestock slaughter. Those are actually coming next week. How much are we watching too when we get that livestock slaughter report, what that breakdown is to maybe indicate even more or less numbers, more contraction, and how to make sure I get my terminology correct for you, to see where that's maybe leading us going into next month and further out.
Yeah, so we're not. So I think the point there is we're not done, right? We look at beef cow slaughter. I expect we're going to continue to see beef cow slaughter running above year-ago levels. So it'll be good to get that information out. I will remind us, beef production would have been a lot lower this year had it not been for the fact that we were slaughtering cows at a fairly fast rate, and also moving a lot of heifers, more than normal at least. So the hole, you and I've talked about this hole, it may get deeper. USDA saying 2023 production down more than 6% relative to a year ago. That got to go back to 2014, 2004 to find other years where we did that. I don't know. We may continue to see that hole get deeper. It's going to be quite an interesting year, and then that I think raises the question of where does beef set relative to competing meats. We've talked about chicken production's been growing, chicken prices been coming down. Might make substitution a little easier than we would have talked about earlier this year as well.
It might make substitution easier in terms of price, but not flavor.
Correct. Correct. So all of a sudden we're going to see how much consumers truly want beef and what kind of price implications we have from some cheaper chicken. And maybe it's zero. My elasticity might be zero.
So we do have another question for you, and this might be a little bit out of left field. As we have talked about more beef cow slaughter in the United States, are we also potentially seeing less imports of beef into the US because of what that mix is?
So we certainly started the year with a big bunch of imports coming in, but it's waned as we've gone through the year. So yes, we got a lot more lean coming in to mix with some of the extra fat that we still are dealing with. So I think that's put a little bit of curve. Now I will say imports strong because prices have been strong this year as well. So you get some demand pull, even though we got a lot of supply. I think that allowed more imports to come in than otherwise might have been the case as well.
That's really it for us this week.
Single report, it's short and sweet, right?
Right. Next week, we have cold storage, livestock slaughter. As we look ahead to that, Scott, what are some things maybe you're looking for and you're watching for in terms of production?
Yeah, so I will say, I think it'll be good to see livestock slaughter just again from the beef cow side of this equation, as well as heifer slaughter. If there's any indications that we're finally starting to slow the loss of beef cow inventory, I'd like to see some cold storage numbers again as well. We've been growing on that front. Does that change? Does that accelerate? I don't want to be too negative here today, but again, there's some demand side signals that could certainly spell some tougher times here, at least for the first part of 2023. I'll end on the positive note by saw mortgage rates fell this week. It's like so even though the Fed's been raising rates, mortgage rates took a step back, and maybe that's a good sign of things to come.
Scott, always great to see you. We will talk again next Friday. No, not next Friday. Maybe
That's
next
right.
Friday. Next sometime. We'll talk next week. It's Thanksgiving holiday and I don't know my right from my left after this week in Kansas City.
It'll be Wednesday or Friday one, right? We won't talk on Thursday.
We will not talk on Thursday. All right. It's always great to see you. We will talk again next week.
Sounds good.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates, to see what's been going on in the markets, check out John Parkin's Market Minute. Have a great weekend. I'm Megan Grabner for Brownfield.